Hello friends, in the series on the income tax cases, today we will discuss a very important case in regard to section 68 addition which are done because of non-proving of creditworthiness of the lender by the assessee. The question before the Chandigarh ITAT A bench was that if the assessee submits all the evidences and the department is not able to prove this fact that the assessee has introduced some unaccounted money through the lender, so whether just on the basis that the assessee is not able to submit the income tax return copy of the lender, the addition under section 68 can be made. This issue has been decided by the tribunal in the case of Convenica, Textiles versus National Faceless Assessment Center. This case is reported in 125 ITR Tribunal at page number 422 and the date of the judgment is 16th June 2025. The present case relates to the assessment year 2020-21 and the case is very straightforward, and in the present case the assessee has submitted a number of evidences to prove the creditworthiness of the transactions. In the present case, there was a party K. The assessee has purchased some goods from K. So basically K was the creditor of assessee. The assessee has made the payment to the K during the year and K has transferred this amount to a party W, and from W the assessee has received unsecured loans on different dates. During the assessment proceedings, when the assessing officer came to this flow of funds, he had a suspicion in mind that this is the money of the assessee which has come back to the assessee through circulation movement. The assessee gave all the evidences to prove the genuineness of the transaction, like the ledger copy, the confirmation duly signed by the partner of the firm W from which the assessee has received the unsecured loan. It was duly stamped. The bank statement of W was submitted, and even the bank statement of K was submitted, from whom the amount was received from W before giving this unsecured loan to the assessee. But the assessing officer was stuck on one point, that the assessee is not able to submit the income tax return copy of the lender, so he made the addition under section 68. When this matter came before the CIT appeal, the CIT appeal also played the same music which was played by the assessing officer, and he also summarily confirmed the addition just on the basis that the assessee is not able to give the income tax return copy of the lender. When this matter came before the tribunal said that in the present case, the assessee is very much able to prove even the source of the funds, and no case has been made by the revenue to prove that the amount represented the unaccounted money routed through W. The tribunal said that in the present case, the assessee has well established the three main ingredients of section 68 to prove the genuineness of the transaction, that is identity, creditworthiness and genuineness of the transaction. And from the facts of the case, it is very much clear that in the subsequent years the loan has been repaid. So, taking into account all the facts and circumstances, all the evidences which are placed on record, the revenue is not justified to make the addition under section 68 just on the basis that the assessee is not able to produce the copy of the income tax return of the lender. Friends, in this regard, my point of view is that there is no law which gives the power to the assessee to seek these type of documents like the income tax return or bank statement of the lender. So, in the absence of this absolute power or any right under any of the act, the addition should not sustain, the addition should not be made just on the basis that the assessee is not able to give the bank statement or the income tax return copy of the lenders. Because if the revenue wants to confirm these transactions, the revenue has very much power to seek this bank statement or the income tax return copy from the department. At the end of this video, once again I am repeating the name of the case. The name of the case is Convenica Textile versus National Faceless Assessment Center, and this case is reported in 125 ITR Tribunal at page number 422, and the date of the judgment is 16th June 2025. Thank you, friends.